Hello, welcome to Your Property Empire. I'm Charles Tarbey, filling in for Chris Gray. On tonight's show, is it still possible to make money doing renovations given the changing market? What do you mean, or what do they mean by a tax-free equity uplift, and how do you protect yourself against any possible interest rate rises in the future? Going to have a good chat about that one because I think it's an important part of what's about to happen in our marketplace. Now, joining me tonight on the show is Carissa Kopoulos. I think I went okay with that, Carissa. I'm not too sure. From Refurb to Sell. Look, Refurb to Sell is a fantastic concept. I really like what's happening here, and I'm glad that we've got Carissa on the show because she's going to be able to explain to us in detail how this all works. So can you tell us a little bit about Refurb to Sell?
Yes, and thank you, Charles, for having me on the show tonight. I'm very excited to be here. So Refurb to Sell is a team of renovation consultants that have been successfully helping now over 80 families across Sydney unlock extra value to their home, which has been in the result of getting higher profits when they sell and or increasing their portfolios by using that equity to buy further properties.
Okay, so if I was a property owner looking to sell, how could you help me?
That's an awesome question. The fun thing we do is we look at what the property is now and what potential it does have, for example, if the client is looking to sell, and what value we can unlock for the property. And what we do is we create a custom blueprint. So I like to call it the profitability blueprint. How can we maximise the return on that property at the most cost-effective way, and what methods can be used so the client is spending minimum but to achieve maximum. And it's huge because what I feel in our experience is the way a property looks is what gets that return. So we're looking at how can we eliminate buyers coming in that are just looking on price and trying to reduce the cost that we're trying to aim for, and how can we attract more buyers wanting to buy an emotion. And what I like to say to my clients is creating that dream home for their buyers so we can increase the chance of getting a top dollar for them.
You're certainly very passionate about your product, there's no doubt about that. Look, it sounds like it would take months though.
See, and that's the great bit, and I get very excited about that because traditionally, if you would get builders or get trades, times of getting quotes and just the whole procedure of what to do, how to do it, it can drag out for a very long time. The good thing with the solution we've created, and I'm so passionate because I've done it for myself and it works, is that it's looking at how can we do that blueprint in the quickest amount of time and then allow that project to work as quick as possible. So on average, we've had clients that we've helped transform their property in less than 2 weeks.
Oh, wow, okay. Now, what if, and this is a situation that occurs a lot with people, what if they don't have cash to pay for the reno? Because that's going to be a big part of it. Look, yeah. I know when I sell property around the countryside, I've sold it over the years, that a property that's well presented is going to make it a significantly different ball game than, it's like guys say to me, look, what would you do? Would you renovate or would you do something else? I said, you put two cars alongside each other, you put a dirty car alongside each other and a clean one, they're both brand new, you have a tendency to gravitate towards a new one. So how do I pay for this reno?
Yes, and that is a very good question because we work with a lot of families that don't always have the money. It's not often that you may have, 20, 30, 50 grand just sitting in your account. So the good thing is, and I've had a lot of clients that have financed it, they've done top-ups, they've done loans, and the benefit from that at the end is they're not touching any of their personal savings. So at the end, when it's settled and they've received their payout from the property, they've then paid the loan off straight away. And in some cases, I've had clients tell me that they've only been a penalty of, say, $1,000 for loaning that amount rather than actually paying for it out of their own pocket.
Okay, now you've helped many investors and it's great to see all over Sydney, and I know that you've got some success stories that you can share with us, so I'd like you to go through those. There's a couple of those for you. I'll bring up the graphics and look at the first success story.
Yes, so again, I'm very excited to share some of these with you, and these are just many of the case studies that we've had and the success that we have had. Now, this one here in particular was a lovely gentleman who wanted to move to Queensland. His property was very run down. I'm talking, I think the most common colour through his whole house was blue. So going to market like that would have definitely attracted someone that was just trying to get price reductions and compete on that price, a bargain hunter. And what we wanted to do was help him attract more of a client buying on emotion. So we did the blueprint for him, helped him get it done. That was done within a couple of weeks. He didn't have to worry about anything. And this one here, from an investment of $50,000 to transform his whole property, initially appraised it at 1.2, he managed to get it to 1.33. So that's an extra 130,000 that went to him. And I mean, even that 80,000 that he unlocked was extra to go to his retirement. So rather than it sitting on the table for the next person to take.
Okay, let's have a look at the next one as well.
Sure. Now, this one here, again, very excited about, loved helping this client sell her property and get it ready so she could go purchase her apartment. This one was appraised at 1.4 from prior to doing anything with the agent, and ended up selling for 1.622 at auction. Again, this needed a full transformation. Nothing had been done to this property for over 20, 30 years. It even had the daughter, who's now in her 30s, her original bed and her original pink walls and the decorative cornice and all those sort of things. So we really wanted to get someone buying on that emotion.
It's really interesting because you've got to try and get somebody to take the risk on this. There are people out there that think to themselves, well, is it really going to work for me or not? And that's probably the biggest challenge. If you've got lots of success stories, I guess you're going to be able to publish those and make those work pretty well. There's a vendor graph I'd like to have a look at quickly if you can elaborate on this particular graph and talk about tax-free equity uplift.
Yeah, so in particular with this graph, this is just 6 examples that we've pulled out, and it just goes to show what the investment was in comparison to the return that vendor was able to make. And that's the whole reason of why we do what we do. It's looking at how can we get a better return for our vendor. We don't want to be renovating just for the sake of it. We need to get that return because we're there to make them more money, and that's what this graph is just showing an example of what return you can get by doing it in the right way and with the right things.
Oh, well, I should call you Mrs. Dimitrakopoulos. I've been practicing your name all day. But
you're doing very well.
Yeah, look, that's good to hear. So if I'm an investor or a homeowner, could I use your services? And if I can, how do people make contact with you?
Sure. So definitely we can help investors and clients that are looking to sell. And what they can contact us through Facebook, that's Refurb to Sell, or they can contact us via our 1300 number, which is 1300 900 958, and they'll go through our office, and we're happy to go in and have a look and see what potential's there that we can help them with.
Oh, that's awesome. Well, Carissa, thank you very, very much for joining us tonight. I really appreciate it, and I hope people can get involved in your service because they can also find you on Facebook as well, from what I understand. So if they go there, I'll have a good look at your services. As you can see, Carissa's very passionate about what she does. She had a lot of success stories. I should ask her some other time about some of the ones that didn't quite work out. There might have been 1 or 2, but mostly from what we're seeing, it's a very high percentage return for people investing in it. So thank you very much for joining us.
Thank you, Charles. It was a pleasure to be on the show. Thank you so much.
What we're going to do now is cross over to my graphs. We're going to talk about the auction clearance rates. We're going to talk about houses coming on the market, the rent movement, and also the vacancy rates. Now, it's a pretty solid week, in spite of what people have been saying around the marketplace with the auction clearances and the fact that they were going to slow down. If you look at their first graph with the auction clearance rates now, we're looking at a situation where the clearance rates on an average across the country were 70.2%, and that's pretty high. Now, this time last year, the charts were 76.4%. So overall, when you look at it, it's been a very, very healthy, still a very healthy start to spring. Everybody expected it to slow down a fair bit. Sydney came in at 72.3%. That, to me, is still very, very solid. Melbourne, the auction capital of Australia, at 73.2, the other way around. Canberra has been a very solid performer for some time too, and that came in at 69.2%. So, in my view, those clearance rates are quite exceptional still around the countryside when you're measuring the auction clearance rates. The other one that's always of interest to Chris when we chat is properties coming on the market. We had 4 or 5 weeks where there was an increase in stock and then it started to decline. So the chart's showing now a slight increase this week over last week with a 0.83% in the amount of stock that's come on the market. So that's probably a good thing. We're going to see a lot more. The auctioneers are telling us there are a lot more auctions booked out there right now. So I think it's an important part of the process if we keep our eye on that movement, because that, coupled with the fact that there are a declining number of buyers coming into the marketplace and the fact that the banks have tightened up in the way in which they're lending, I think that we're in for what we would call a proper real estate marketplace. Rent movement this week, if we can look at that chart as well, there wasn't much change at all in the rent movement. A couple of the capital cities moved up and down, but overall it was pretty equal. You know, when you go back a few years from the start of these charts, you can see it's been a very steady movement upwards. Even though it's been up and down, it's been a pretty steady movement. And finally, if we look at the vacancy rates, these are ones that I always like to pay attention to with the vacancy rates, especially with Perth. The best performing capital city is Melbourne with 0.83% in terms of vacancy. Sydney came in at second at 1.09%, and that was followed by Perth. And Perth, I'm very pleased to say, came in at 7.51%. Now, it's had a pretty interesting time for quite a number of months, and it's been sitting under the sevens, or under the eights, sorry, for a little while now, and that's really a very good indication that that marketplace has made a correction. If you add those three together, that comes in with an average vacancy rate of 3.14%. So across the nation, it's been a very steady week, still moving in the right direction. So I think the people who are talking about the marketplace out there in negative sense, it is tougher, it is harder, but it's certainly not bad. When we get clearance rates in the 45s and 50s, and I was certainly auctioning around those times, that's when you know you're in a very, very tough market. That's when you know your auctioneer and your real estate agent know what they're doing. So we're going to take a short break, and after the break we're going to come back and we're going to talk about home loans with one of our leading brokers in the home loan industry. So we'll see. Welcome back to Your Property Empire. Joining me tonight on the show is Taryn Mencinski, and Taryn is Taris is a senior credit advisor. I better get this right. I've been mumbling all night tonight. A senior credit advisor at Century 21 Home Loans, and it's an important role. He's one of our leading brokers, and it's always good to have him on the show. So I'd like to welcome him here on board tonight. Taris, what's more important right now is what changes are going on, particularly with the Reserve Bank. What impact does last week's RBA announcement have on the people who are feeling stressed with their mortgage?
Good evening, Charles. The Reserve Bank didn't change interest rates last week, and that's the 12th time they haven't changed. The impact on that for borrowers gives them a lot more breathing room, gives them a bit of confidence to feel that if the next interest rate rise is going to be up, it's not going to be that soon. So therefore, it means that there's a bit of opportunity for them to consolidate their finances, have a look and see what their planning is in terms of short, medium and long term, and have some time to put a plan of action into place before any changes take place.
Well, look, how does somebody protect themselves, though, against possible future rate rises? Because you look at what's happening in the United States of America, that's on the move. And I know that our economies have always been somewhat connected, although our interest rates are really geared to our economy. When they changed interest rates a few years ago and they dropped them, everybody was a bit concerned because the real estate market took off and people started borrowing more. So how do we protect ourselves now against any possible future rises?
The best way, obviously, is to look at your finance obligations and consider if you want to fix part of your loan or all of your loan. Look at how long you're to be living in the place you're living in or having the investment property you have. If that's going to be for a medium term, say at least 2 or 3 years, consider fixing part of your mortgage for that length of time. That'll give you the right balance between having a loan that has a fixed component in the repayment and one that's a bit more variable.
Yeah, that's the way I ran it with my children going back. When I looked at the interest rates and they were fixed, they were pretty low, but they dropped even more. They fixed a component of them and they took part of variable, so they were able to manoeuvre themselves a lot more. The Reserve Bank was worried about this. They flagged that too, because there are a lot of people who have taken fixed loans out there, and of course if they're going to come out of those fixed loans in maybe 2, 3 or 4 years' time, and the landscape's going to be different and the interest rates might be a lot higher. If they haven't had any debt reduction, a lot of these people could be in trouble. But let's take a look at different mortgage products, new and different mortgage products that you might recommend to the viewers and what benefits they might get from those before a rate rise occurs.
One of the main benefits that people can use for any type of variable rate loan they have at the moment is an offset account. An offset account is a standard transaction account that you get at a bank, but instead of receiving interest, and let's face it, who receives interest on their transaction accounts now anyway? Instead of receiving interest, what happens is that the bank will offset the value of funds in the savings account from your loan account and only apply the interest to the difference between those two numbers. So if you have a loan of, say, $400,000, but you have $5,000 in your offset account, you'll only be charged interest on $395,000. That may sound like small change, but that really compounds, and it's tax-free advantage because you're not paying any tax because you're not receiving interest. So therefore you're getting multiple benefits from having an offset account. The other benefit with offset accounts is that you can have multiple offset accounts connected to one loan. So if you're diligent in your saving and you want to have a holiday savings account, a child education savings account, a renovation savings account, you can park money in each of those accounts and receive the benefit all off your home loan.
Oh, right. Well, that's fantastic. Well, thank you very, very much. It's great to see you here again, Taris, and I no doubt see you at the office. Appreciate you coming along tonight.
You're welcome, Charles. Thank you very much.
And what we're going to do now is cross over to my dear friend, Mr. Tom Panos, and he's got 3 wonderful properties that he's going to demonstrate tonight. I'm pleased to say one of them belongs to our friends at Century 21. Good evening, Tom.
Hi, Charles. How are you going?
Very well, thank you.
So let's move on to the first property, and I think the one that you've got scheduled number 1 today is a property in Manly, Charles, in 5/32 Quinton Street. And just a little bit about that, it's a strata title property, of course, and it's very well located to Manly, and Manly's a very hot area at the moment and has been for a couple of years, Charles.
Yeah.
Short stroll to the beaches.
Well, what do you see with this particular property? I was looking at it earlier on, and that magnificent view that you've got there as well, Tom. These sorts of properties are very hard to come by. Is this going to auction, this particular property?
Yeah, this is an auction. It's scheduled for the 23rd of September, Charles, which is, I've got to tell you, it's a big Saturday of auctions. It's the week before the long weekend, so everyone's squeezing them in.
I preferred that last photo, Tom, the one with all the wine cellar.
You like that?
That's good. What's the price guide on this particular property?
1.67 mil.
And the agent that's offering that?
Luke Burgess from Bell at Manly.
Fantastic. And let's look at the second property, Tom.
Second property we got, Charles, is 20 Cambridge Street, Enmore. It's a good location, lifestyle home. Been, total restoration in this property, Charles. 4 bedrooms.
I was looking at it earlier on, and you could really notice when you look to the right and left-hand side of the property, when it's a photograph at the back, you can notice what the area was like years ago before people came along with such fantastic ideas to change these particular properties. Going back in my early days, I would market and sell semi-detached properties in Dulwich Hill and Marrickville and those areas, and my gosh, it's changed so much.
Yeah, well, Charles, I know because you've had offices in that part of the world for many years, and this is about 50 metres off Enmore Road, which becomes a continuation of King Street. So it's the kind of property that's going to attract the lifestyle of people that want to be there, but it's a significant home. It's got a price guide of, it's a really, look, I've got to tell you, I've sussed this property out. It's a top home. It's got a price guide of around 2.2, I think, and the auction's on the 23rd of September.
Excellent, Tom. And the final property in St Ives?
Final property, St Ives, in the Century 21, Jason Roach, someone that's come from the world of corporate banking to the world of real estate at C21 Northside Linfield, and this is 5 Monterey Street in St Ives. It's got a similar price guide, 2.2. The auction is on the 30th of September. And yeah, it's a nice home, multiple living. If you actually have a look at it, it's very family friendly. And I think someone that looks for an immaculate home near the heart of St Ives, they should go and have a look at 5 Monterey Street, St Ives.
And the price guide for that one, Tom?
2.2 mil.
Okay. What's your forecast for the weekend coming up?
Charles, I think, well, as you know, I'm a little bit biased because I get to do the high clearance rates areas of the inner west and inner city of Sydney. I'm actually thinking to myself, it's probably going to be a few percentage points lower than it was this week, and mainly because there's more stock on the market.
Yeah, there is more stock coming on the market, as you mentioned, and you've got the AFL final coming up, so there's going to be a changing marketplace in Melbourne as well. They closed for the whole week.
Well, Charles, when I was running a magazine in Melbourne for News Corp, I got it all wrong one year. I said to them, why on earth is there no revenue? Did you all not go and chase all your clients up and sell some advertising? And they said to me, listen, in Sydney you better wake up. We don't sell ads for the week of the grand final week because we are out there watching the football, not doing open houses. That's
great lifestyle. Well, thank you very, very much again, Tom, for coming on and sharing those properties in your wisdom.
Thank you, Charles. Thank you, sir.
Thank you all for the show. Until next time, I'm Charles Tarbey. Thank you for watching.
Information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.